Here's a look at where markets ended the week with rising concerns over massive AI spending. The Max 7 lost about $890 billion in market value Thursday. Markets also moved by higher oil prices, growing expectations that the Federal Reserve will keep interest rates higher for longer. Joining me now, Bullseye American Ingenuity Fund portfolio manager Adam Johnson. Amid all of this volatility, you are still focused on second quarter earnings success. 170 S&P 500 companies reporting next week. So we're in the thick of it right now.
Oh, we're in the thick of it, and I'm so happy because it's been so strong. Cheryl, about a third of the S&P has reported thus far. Growth is 43%. I mean, I'm a bull, and that's higher than I even thought. Last quarter, the growth was 26%. Granted, I don't think by the time all 500 companies have reported, it's still going to be 43. But I do think it'll still be somewhere between 25 and 30%. The last time we saw two back-to-back quarters of 25% or better earnings growth was coming out of COVID in 2022. Earnings are so strong, Cheryl, and that is why I'm comfortable. And that's why I'm glad we're in earnings, because I think it's more good news that offsets some of the uncertainty coming out of Iran,
Look at the numbers we got out of Intel.
Yeah.
I mean, talk about a successful move by the U.S. government. That's the taxpayer that's making money off of that one. And
I know.
The IBM news.
For once, government actually got it right? And bought shares at like $22, and now it's at 100, so it's a five-bagger. Well done, Washington, for once. The whole AI story, I think, is misunderstood, Cheryl, in the sense that we are seeing record profit margins across the board at S&P 500 companies. Profit margins have never, ever in the history of this country been 13.5% before. I think that's the early return on AI, right? Because think of it, we've got tariffs, we've got inflation, so what's the difference? It's AI. And that's why I think all this money that's being invested in AI, the AI CapEx that's created all the hand-wringing and some of the selling across tech, I think that actually it's worth it. In other words, 1 + 1 = 3. Spend the money because you're making more money. That was the lesson from Google. They're spending more, but they're making so much more than we all thought.
Yeah, well, Alphabet got hit, obviously, because of concerns about spending. But are these buy opportunities?
Yeah, you better believe it. I've been buying Nvidia. Micron is trading at less than 10 times earnings. Micron. And by the way, they're growing their earnings at more than 400%. Nvidia trades cheaper than the S&P 500, right? The S&P trades at, call it 21 times earnings. Well, Nvidia's trading at 20 times earnings. And they're growing at 80%. This is crazy. There's this hand-wringing right now that has pushed all these names down. I think it's a phenomenal buying opportunity. I was deploying capital all of the past couple of weeks.
Interesting, and
in the hole.
And you're right. No, the second quarter data, but also not just the earnings, but the econ data. So let's talk about this, because the Federal Reserve meeting is next week. Largely expected they're going to hold rates steady, but futures markets are pricing in an 82% chance of a rate hike in September. 60% chance we're going to get 2 rate hikes this year.
I know.
I'm not sure where this is coming from. I'm of the purview that with the job market as strong as it is, we had initial claims that came in on Thursday, best number we've seen since 1969. When you have a strong labor market, how can you justify a rate hike?
Well, I guess they don't want it to get too strong, right? Because then it would overheat. I mean, that would be that logic. I totally disagree with hiking rates at the moment. You know, inflation we saw over the past few weeks, the most recent reports, is coming down. And how ironic, by the way, that both the Fed and the market as a whole suddenly got very hawkish, meaning they wanted to raise rates, as oil came back to, okay, now I know the on-again, off-again thing in Iran is sort of reinflating oil. But you know what? Oil still in the 80s or low 90s is well below the high of 130 when this whole thing first began. In fact, you know, here's an interesting one for you, Cheryl. If you go back to the 5-year period from 2010 to 2015, oil averaged $85, and inflation was only 1.5%, yet growth was 2.5%, and the stock market over those 5 years rallied 83%. So we can live with oil in the 80s and 90s.
Yeah, no, we've seen this play out before. Certainly the political side of it is a whole other conversation because of the midterms coming, but we'll see you know, where the conflict goes, obviously, with Iran. Adam, it's great to see you as always.
Oh, thanks for having me.
Yeah, thank you for being on with me. I appreciate it.